Welcome to Halal Money Matters, brought to you by Saturna Capital. I'm Monem Salam.
And I'm Christopher Patton.
I really like to interview people, but every once in a while, it's just nice to just sit and talk to you.
It is. It's been a long time since just the two of us sat down and had a conversation.
It's been even longer since we've actually seen each other.
I know. I was thinking about that earlier, that we're about to hit the end of the year, and this full calendar year, we have not recorded in person together once. And I think about a year ago, I said something like, "Oh, I can feel it in the air. We're going to see each other soon." But you know what? This time I'm sure that I'm right this time.
Yeah.
Soon we're going to be together recording.
It's going to happen.
Yeah.
It's going to happen. So, yeah, I mean, I think, we're coming up on the end of the year and it's, a lot of holiday time and those type of things. So I thought what we do is kind of just have a laid back chat about, just the holidays in general and maybe what people should be thinking about when it comes to obviously their investing. But I think it's an important subject. And
is this where you're going to stop me from spending too much money over the holidays?
Yes, that's exactly what I was going to do.
I could see it in your face. This is an intervention.
I have 3 points I was going to tell everybody: stop everything you're doing. Go hide in a corner somewhere, take all your money that you were going to spend and invest it.
Oh, okay. My daughter will be very happy to hear that.
There you go. No presents. And, I don't know if you've read the stories or not, but this is probably going to be one of the most expensive holidays we've had in a very long time.
I was just reading something about that for Thanksgiving and the cost of food and turkey and inching upward.
Yeah, we totally began to realize how dependent we are. Even if we're eating turkey, that might be coming from another country rather than from, down the road or those type of things. And the supply chain really has caused a little bit of disruption. And that's where the prices are beginning to come up.
What's your Thanksgiving go-to?
So we have what's called a Cousins-giving. All of the cousins in our family try to get together.
Okay.
One sponsors the event. So this year at my sister's place. And so last year obviously was canceled. So yeah, it's really fun. And to be honest with you, I try to work out really, really heavy in the morning.
Sure.
Right.
Sure. Yeah.
And then watch football and eat. That's my Thanksgiving, because I'm from Dallas. I'm a Cowboys fan.
That's true.
Texas America's team.
Boy. Yeah. Yeah.
But it's not only about the Thanksgiving part of it. It's also during the holiday, Christmas and New Year's and that type of thing. And typically during those times, I'm actually attending conferences. We don't want to celebrate Christmas, but it is a holiday time. But like this year, I think after 2 years or so, they're actually going to have a physical conference in Chicago.
Yeah.
We're hoping there's going to be a lot of people. So,
and that's usually right when Christmas is happening.
Literally right.
Get the pick of the venues and everything. Yeah,
exactly. Nobody wants to go to a conference except for the Muslims, but it's fun. I get to see my, old friends and, catch up on the year, and I really do enjoy it.
Good.
Enjoy it a lot. So let's go back a little bit. And obviously we're not going to be talking about the fact that you shouldn't do anything for the holidays. And that's sure. That would be a little bit too much, but I think there are ways to give gifts, which are much more long lasting than things that might not last. So, for example, on the low end of the poll is going to be what's in craze right now. It's probably going to be bid up on eBay or Amazon and stuff like that, and you're going to pay an arm and leg for something your kids are going to do maybe for a month or two, and that's it.
Sure.
But it's interesting. On one of the episodes, if you remember a while back, we had Dr. Mirza, Yaqub Mirza, that came on.
Yeah.
And one of the really cool things that he kind of gave me the idea of doing is he actually gives shares in the amount of funds, not necessarily his kids, but definitely his grandkids and those type of things. So obviously,
great stocking stuffer.
Exactly. He obviously gives him a regular gift also, I'm sure, but it is something that was kind of a novel idea.
Thoughtful gift giving.
Yeah, exactly.
Yeah. My daughter is 6 years old, and ever since she was old enough to kind of understand the concept of giving as one of her holiday gifts, I have her choose one or two causes or nonprofits to give to as one of her gifts. Of course, she doesn't have them off the top of her head, so it's usually kind of a decision tree of, well, you want to go people, environment, climate, animals, food. And it's been interesting to see her every year kind of get it a little more. And last year, half of it went to Australian wildfire recovery and the other half went to a clean water fund somewhere. Yeah.
And it's also interesting to see what they're passionate about. And I think I've said this in previous episodes as well. For my kids, what I tried to do was every time I gave him some money, or now that they started to work, I was like, divide it into 1/3, right? 1/3 you invest, 1/3 you give away to charity, 1/3 you keep for yourself. And it's, my kids, it's interesting to see what charities they choose.
Mm-hmm.
And it kind of gives you an idea of what they really are concerned about or passionate about, those type of things. So it's learning experience. It was a learning experience for me as well.
Well, it is the end of the year. So what are our financial obligations or things we should be thinking about as the year draws to a close?
There are some important, things to think about as the end of the year comes.
Before we get into this list, I want to know, what was your favorite Halal Money Matters episode of 2021?
Oh, I think for me, hands down, it was the economics of Ramadan.
That was a great episode. Yeah,
it was. It was just fascinating to see just the different nuances of different Muslim cultures around the world. And you sometimes you think that, oh, this is naturally going to happen because of Ramadan, and really the opposite ends up happening. Right?
Yeah,
like food inflation, for example.
I would go with the behavioral finance episode, which was, I think, right around the same time, and just learning more about the psychology, what's being studied, where is this field going, what's going on in the investor's mind.
Yeah, it was really cool. And I'll be honest with you, like when somebody recommended the idea, it wasn't like my idea, or I don't think it was yours either. Somebody else had recommended it, and I'm like, what? Why would we want to talk about that? and then as we got into it, I was like, whoa, this is a pretty interesting topic. And
Yeah.
for those of you that for those that are going to go back and listen to it, I really I still in my head one of the last comments that he made, and so I'm not going to give it away.
Okay.
But I still sometimes think about the idea of what's called gharar in Islam, and his comment that he made on that it's really was to me an eye-opening topic.
Well, go back and listen to both of these and all of the episodes, really.
But not only that, you're going to hit the like button
and the subscribe button. See, look, we're promoting the podcast. It's great.
Exactly.
All right. Now we can get into the fun part of the episode, which is the money matters.
Yeah. So I think what we should do is just go back and forth. So we'll play this as a tennis match. I'll give you one, and then you can explain it, and then you give me one, and I'll explain it. How's that?
That sounds great.
Okay, let's do it. Okay, so number one is review your year and look at your investments and see if there's any adjustments that need to be made.
Right. So there could be a few things going on here. When you look back at your year, did you have major life events? You want to look at your career. Did you get a raise this year? And then also just being 1 year closer to your goals, whatever they are, whether it's retirement or your child's education. Any one of these things could potentially precipitate some type of tweak in how you're allocated or how you're making contributions. And you can always be thinking about this. It doesn't have to be at the end of the year, but some people find that at the end of the year is a kind of a natural time to reflect on these things, making sure that you are keeping track of what you're doing and that you're on track to reach your goals in your various types of qualified accounts that you hopefully have.
Yeah, I mean, in the 401k and those type of things, it's some people only put enough money for the company match. But really, you can do more. So a lot of times people don't realize that. And if you are lucky enough, I'd say lucky because I'm going to do this next year. If you're lucky enough to turn 50,
oh boy,
oh yeah, don't even remind me. It's like I just reminded myself, and I already feel old.
Monem turns 50 sounds like an episode title.
Exactly.
I'm going to make a note of that.
So yeah, you can increase your contributions
right.
to what is it? I think another $6,000. So you can, rather than putting 19,500, you can go all the way up to 25,500. And cool. and when for between, let's say you're 50 and you're 62 and a half, when you maybe think about stopping it, now that's a pretty significant extra money that you can put in if you really wanted to do that.
Yeah. And if when you first set up your retirement account, set it to $50 because you were just getting started in your career and you left it there forever, it's not really taking advantage of the full trajectory of your career. Yeah. So just make sure you're keeping an eye on that and keeping up with whatever changes you may have in your income.
Yeah. And, the other thing, Chris, that, as a Muslim, we should be thinking about is really taking a look at your 401k, for example. I mean, I know we're specifically focusing on 401k, but this is an asset allocation for all of your different accounts. But
sure.
Specifically for the 401k, maybe now as things slow down during the holidays, it might be a good idea to look at your 401k and see if there's a way for you to make it more halal. And typically what a lot of Muslims do is they look for a brokerage option within their 401k. And if they don't have it, they go talk to their HR and try to, get them to do it. So that's I think in the minimum, I think people should do that because again, it's a great way for you to be able to make your investments halal.
Well, next one on the list, funny enough, we kind of just jumped into it, is taking a look at your various qualified accounts. I sort of stepped on this one, but I'm sure there's more we can add here.
Oh yeah, there's always more. I think on that one, again, it's very similar to what we talked about earlier, which is just a review of all of your accounts. Just make sure number one is that if you are contributing to, for example, an IRA rather than a 401k or something, you're maximizing the contribution.
Right.
You can do it also for your spouse as well. And if you're in the right income tax bracket, then you can also do a Roth IRA, right? If you're not in there, you can do a backdoor Roth IRA. So there are other options to look at and to be able to put money away to maximize that type of savings for you.
And technically on a lot of these accounts, you have until April of next year to make contributions, but it might be a good idea to not wait until then, because once you get into next year, you could be working on next year.
That's true. And then this gives us an opportunity to talk about it twice in this episode. And then later on, when we talk about a New Year's one, we'll remind you again that you have until April 15th to be able to put that money away for last year. So, but besides an IRA or ESA, there's also what's called a health savings account. Now, this is something, not everybody has access to it. Let's just start there.
That's true. It's true.
But if you do have a high deductible health insurance policy, then you are able to put away money into a health savings account. Now, some people call this the triple tax benefit. You want to get into that a bit, Chris? Do you know what the triple tax benefit is?
I think we should get into it.
Yeah.
So the contributions are pre-tax, much like a 401k, if that's the way you're doing it. Then the growth in the account is also tax-free. So there's your second one. And then if you're withdrawing it for qualified medical expenses, that's also going to be tax-free. So there's your 3 tax advantages right there. Whereas with maybe a traditional 401k, you're going to get taxed either up front or when you take it out. With a health savings account, if you're using the money for health related expenses, which is a pretty wide range of qualified reasons to use it, then you get that triple tax advantage.
Some people think, oh my God, I don't want to do a high deductible because I have so many expenses that I have medical wise. Sure. And yes, legitimately enough, there are people who might not want to do it. But when I did the analysis, I was surprised at how many people could actually benefit from an HSA, because you do still have a deductible, meaning that after you get to that level, the regular kind of insurance kicks in. And if you're putting away, let's say $7,500 per year, because that's what you're allowed for a family HSA, it still makes it very well beneficial for you.
So with a high deductible plan, you're not left holding the bag entirely. It's absolutely worth looking into and learning more about.
Yeah, I mean, I know kind of just off the top of my head, I think if you're healthy, if you're young, if you're a doctor, you're in a family plan is basically somewhere where you don't think you'll be spending that much money on healthcare. That's the right plan. All of those things were medical related, except for the doctor one. Do you know why I mentioned the doctor one? It's all because of contacts. You can go to your friends and get free treatment and never have to spend any money. So that's why I mentioned the doctor one.
Sadly, sounds good though. Is it too late for me, Monem, to go back to medical school?
It's never too late. Never too late. So one last thing that I did want to mention, and that is that IRAs and 401ks actually have beneficiary designations. And so you do want to review those, maybe not once a year, but if there has been a major a changing experience for you, whether it's be a divorce or another child or, whatever it is, it's important to be able to go back and review it. And now it's a good time to be able to fill in the blanks. So the next one we want to talk about is, if you're a business owner, right, what type of things you could possibly do, before the end of the year.
So I'm not a business owner. But what might be some ways, if I was to think about retaining employees and attracting top talent? What types of things might I offer that I could start thinking about this time of year? Those things that people suggest you do, maybe you never got around to it. Maybe it's finally time to do it.
Yeah, I mean, the very simple one is, thank God you had a very profitable year.
Mm.
You could think about maybe a bonus for the end of the year. That is
Mm.
obviously an expensible item, right? It keeps people happy and that type of thing. But really, more for the long term, the biggest one is starting a retirement plan for your employees.
Just now, we're talking about it from the employee side. Plan that you've been offered by your employer. You want to take advantage of that. Now we're saying if you're the employer, make sure you're taking advantage by offering a plan like this.
Absolutely. And I mean, there's multiple different benefits, and most people say, they equate employer plan to 401k, but there are the ones that are out there. So for example, if you go to our website,
Saturna.com,
then you can look up all the different types of employer plans that are available. So like a simple plan, there's a SEP plan, SEP, there's a 401k. So there's not only one size fits all. Some are beneficial for one versus another. And that's probably too much for this podcast to talk about, but it is something to be able to look into. And sometimes, you want to match your employees. Sometimes you don't. All of those things are flexible enough, but definitely offering that. And one of the things that's important, it's happening more and more, is that more states are slowly coming up with mandates for actually having these plans. Either you doing it yourself or the state forcing you to do it. So might as well get ahead of it and do it so that you have the choice rather than the state telling you to do it.
Yeah. Do you want to be rushing at the last minute and end up with a plan you don't really want just because you're avoiding it? Maybe it's time to take a look.
Exactly.
All right. We've got one coming up here. I would like for you to kind of get into this one for my benefit. Tax loss harvesting.
Right. So, and this applies to long-term investors and short-term investors. So as you know, the government taxes capital gains. If you have a short-term capital gains, it's in the high 20s, and if you have a long-term capital gain, it's in high teens. And so what you can do is, if you did have a realized capital gain, meaning you sold something in the year for a gain, you can offset that with a loss. So what a lot of money managers do, and we do it at Saturn as well, is that they will kind of offset any gains, the realized gains, with maybe selling something that's at a loss in the portfolio, and then 31 days later buy it back if they so chose. And what that does is that offsets your capital gains with a capital loss. Now, importantly enough, remember earlier in the year when there was this whole frenzy about GameStop and AMC, and a lot of people make so much money. Well, if they got involved and they sold it in the same year, I mean, some people did it after one day, but let's say it was like same year. I mean, they're 30% of that, it's going to go straight into taxes. Right. And so most people don't even realize that. They're like, whoa, I made $100,000, but technically it's actually 70,000, that type of thing. Right. So this is a good way that if you had some losses from the other trades that you did that probably didn't or work out as well. Right.
This hypothetical person is,
right. Then you can actually do that. So that's one way to do it. And if you have all losses and no gains, then you can, at least for next year, the losses carry forward, but you can also take $3,000 of the losses and deduct it from your income. So this is called tax loss harvesting, and it's a great strategy to be able to use.
So let's say I'm your average investor. Sounds great. I don't know how to do that. What are my options?
That's a great question. So I mean, you definitely, maybe you can talk to an advisor, have them review your portfolio and be able to do that. I mean, if you're doing it yourself, maybe you can just hire somebody for a small fee and they'll take a look at the portfolio. Sometimes we're in the position, thank God, that we don't have any losses in our portfolio and everything's up and we don't have any tax loss harvesting to do, which is great. And then be happy to pay the taxes because you made money that year.
I'm with you on that.
So, I mean, the next one is regarding, very similar to that, maybe a little bit similar to the tax loss harvesting strategy, is really, and we talked about this at the very beginning, when we were talking about the end of the year strategies, which is, gift giving, and really talking about it from an investment perspective, philanthropy, maybe even thinking about a donor advised fund, or known as a DAF. Can you tell us a little bit about that?
Well, when you think about philanthropy, maybe you had a great year. and your amount of taxable income is way up here, and maybe you want to like bring that down a little, giving either to nonprofits or through a DAF, we can talk more about donor advised fund, is a great way to kind of manage that strategic giving, we would say, potentially.
Yeah. I mean, like the last decade, Chris, has been a great decade for a lot of people. And a lot of people have a lot of, whether they through the company stock employee plan, whether they invested in the company that's done really well over the past decade, they have a lot of capital gains that's embedded within their portfolio. And one of the things that I know, my real job is not doing a podcast. It's actually doing portfolio.
That's what you think.
So for our clients, what we tell them is like, if you're going to give money at the end of the year or even throughout the year anyway, right? One strategy that you can let's kind of give an example. So let's supposing you are a person who gave $10,000 in cash to your favorite charity every year, right? What you can do is take a look at one of the stocks that you have a large gain in, right? Give $10,000 worth of the stock to a charity, and then replenish that with $10,000 of your cash into the portfolio. And what that does, it automatically raises your cost basis up to a level where you don't have to do it. Now, what's the advantage of that? Is that when you sell it, you have to pay your owed capital gains, and then you give it to the charity. If you directly donate it to the charity, then there's no capital gains tax. And because the charity is non-taxable, they don't pay capital gains tax as well. So it's a really great strategy to use to do that. And especially when we're talking about zakat or anything like that, this using the strategy is really great.
Donating a stock is something that I never thought about until this past year, learning more about it.
Yeah.
I think maybe a lot of people, they are just used to the mindset that you described, which is, okay, you want to donate, you donate the cash.
Yeah.
But it doesn't have to be that way. In some cases, it's more advantageous not to do it that way.
Absolutely. In a lot of cases it is. And one thing that you have to keep in mind is that obviously the charity that you want to give to, like if it's a mosque or something like that, they do have to have a brokerage account.
Sure.
But this is a great way for you to encourage them to do it, because, like, for example, if you normally give them $10,000 and you ended up, just giving it, and you had long-term gains and you just gave them the stock, that's $1,800 in capital gain savings you're going to get just for doing that. I mean, and that's different for different people. Obviously, you have your own taxes and you have to file your own reports. We're just being general here.
Sure. And we kind of sort of touched on the donor advised fund or a DAF. It's a fund that you can make your contributions to, that then your philanthropic donations come out of the fund, and the money is basically coming out of your hands into a place where it can be managed.
So one thing is, I mean, this is a really large topic, but so I did want to mention, Chris, that we actually on our website have a webinar that gets into this a lot more specifically about exactly what a DAF is and how do you do it. But very, very simple is that a donor advised fund is an actual charitable organization. Okay. And once you put your money in there, then you get the taxable deduction for donating to a charity. But the advantage of that is you don't have to decide right away where that eventually that money will go. So for example, you're coming up on the end of the year, you're like, oh my God, I didn't realize I was supposed to do this. I don't even know what charities to give it to. Open up a DAF account, put the money there, and then next year or in the next 2-3 years, you can figure out where you want to be able to give that money. It's a great way also if you're, for example, you're working for a company, they go IPO, and now you have this huge capital gains, bill to worry about. That might be another reason why you'd want to think about putting it into a DAF and then worrying about later what you really want to do with it and how you want to be able to do that.
Right, because the DAF itself is the charitable organization, and the money's coming away from you. It's there. When it's in the DAF, it can be invested and grow further. And it's, I don't know, I kind of think of it as it's sort of like a holding pen.
And you can, into the DAF, you can donate stock, you can donate mutual fund shares. So it's not only cash. So that makes it, and you can actually, for those, some DAFs that are able to do it, you could even do like pieces of art or, those type of things as well. It doesn't have to be something that's liquid. So it just depends on the DAF. But the other part of this, since we're talking about philanthropy is, again, end of the year, right? You're going to be with family, and it's a really important time to be able to maybe have a conversation with them about God has blessed you with some money, some wealth, right? How do you want to be able to leave a legacy behind? And it's a good conversation to have with your family to say, you know what, I do want to donate to charity, because, you probably know this, Chris, but for a Muslim, up to 1/3 of their assets when they pass away can go to a charity. And so if you do that, you can possibly even build a legacy for the next 100, 200, 300 years. And so really talking to your family about it and really coming up with a strategy of, what causes you feel passionate about and where you want to give and how long you want to give for, all of those things become a topic of conversation. Not to be morbid about it, but it's a great way to be able to discuss charitable giving with your family.
Yeah, this is not the first time this topic has come up on this show, and I'm sure it won't be the last, as we try to encourage people to have these conversations that may be difficult. It may seem unpleasant, but it's important. We did a whole episode about estate planning. Like, as you said, not to be morbid, this is a part of life that we need to address.
But that was a great segue into the wills and trusts part of it.
Exactly.
You're absolutely right. And for a Muslim, it's an obligation. We have to have a will. The Prophet Muhammad said that, if you have any assets whatsoever, you shouldn't go 2 nights without having something written that says what's going to happen to them after you pass away. So it's very important for us to do that. So really, again, sitting down and this is a conversation you have with your lawyer, right? Who can help you draft it. But this is also a conversation you have with your family. To be able to say, this is how I'm going to be dividing my estate up, and this is why I'm doing it this way, and this is how I want you to help in making it smooth transition. Obviously, you're not going to be around, so you don't know what's going to happen after you pass away. But having those conversations in advance might actually save a lot of heartache for the surviving people.
Yeah, and this is the kind of thing where people might make it a goal at the beginning of the year. Oh, this is the year I finally address that. Making that plan, and now here we are, and you think, well, the year just flew by, I didn't get to it. Don't let that happen again. If you can, you still have time. Now's the time.
Yeah, and some people, when you think about wills and trusts, you think of wealth, but really has also, what happens to your children, who takes care of them, if you and your spouse pass away. Especially if you already have a will, then great, great job. But then again, if you had a life-changing event, right? You got a divorce, you had a new child, your parents passed away, something happened that you need to just review it. You might not need to change it, but it's a good idea just to be able to review it and to figure out, it is still in that place that you left it. But have it somewhere where people can access it, obviously, because an inaccessible will is not going to do anybody any good.
Right. Yeah. Let your family know. You mentioned, people, they won't be around to see what happens, but I would encourage you to think about how not having a plan could affect your family in ways that you already listed, and let that spur you to action. Yeah,
absolutely. So we've covered like 6 topics in a pretty good short amount of time. I think it's just things to think about before the end of the year, and it might have long-term benefits for you.
Well, I look forward to speaking with you again in the coming year.
And hopefully you've listened to every single episode and you've loved every single episode.
That sounds great.
So definitely subscribe, but also leave a comment. I mean, we would love to hear from you, not only about, how this helped you, but also other future episodes that we need to do. And we're always looking for ideas.
Yeah, if you want to hear any of the episodes we mentioned, you haven't, maybe the economic impact of Ramadan, behavioral finance, estate planning, these are all available on Saturna.com, our website, or on iTunes. Subscribe, leave a review, let us know if there's something you want to hear, share it with your friends. Thank you for listening. Please consider an investment's objectives, risks, charges, and expenses carefully before investing. To obtain this and other important information about the Amana Funds in a current prospectus or summary prospectus, please visit amanafunds.com or call toll-free 1-800-728-8762. Please read the prospectus or summary prospectus carefully before investing. The Amana Funds are distributed by Saturna Brokerage Services, member FINRA and SIPC, and a wholly owned subsidiary of Saturna Capital, the investment advisor to the Amana Funds. Investing involves risk, including the risk that you could lose money. The Amana Funds restrict investments to those companies consistent with Islamic and sustainable principles, which limits opportunities and may affect performance. This material is for general information only and is not a research report or commentary on any investment products offered by Saturna Capital. This material should not be construed as an offer to sell or the solicitation of an offer to buy any security in any jurisdiction where such an offer or solicitation would be illegal. We do not provide tax, accounting, or legal advice to our clients, and all investors are advised to consult with their tax, accounting, or legal advisors regarding any potential investment. Investors should not assume that investments in the securities and/or sectors described were or will be profitable. This podcast is prepared based on information Saturna Capital deems reliable. However, Saturna Capital does not warrant the accuracy or completeness of the information. Investors should consult with a financial advisor prior to making an investment decision. The views and information discussed in this commentary are at a specific point in time, are subject to change, and may not reflect the views of the firm as a whole. All material presented in this publication, unless specifically indicated otherwise, is under copyright to Saturna. No part of this publication may be altered in any way, copied, or distributed without the prior express written permission of Saturna Capital. As of September 30th, 2021, no Amana Fund or other investment account managed by Saturna Capital owns securities of GameStop or AMC.